Hey, what's going on, traders? I'm not going to put the camera on for now because there's big bright sunlight that's kind of glaring in my face, so there's a weird sort of glare. So that's it. We're going to take a look at the markets this afternoon, and hey, what's going on, broke boy? Hope you're well, sir. So there's a 30-year bond auction going to take place at 1 p.m. and I want to see if this is going to have any effect on the market. That's all there is actually on the news docket here in terms of events, activities. We have a Bank of Canada speaker at 2 p.m. Eastern, so that might be something to watch out for, but most probably not. And again, just I'm paying attention to this 30-year bond auction that's going to happen here because the bond market's quite consolidated, quite tight. If we flip over to the charts real quick, and there's my camera, you can see the big glare in my face, so I'm just going to remove that. But I'll just say what's up to you guys, and I'll just remove that. So I'll be a ghost for now. So if we look at the markets here in terms of the treasuries, we can see that we're very consolidated. We're very tightly knit. Pretty much a lack of volatility. A lot of slow kind of trap action today. I only had one really decent trade today, and it was my only trade of the day, so I'm grateful for that. And it was early morning before the market even opened. So now we're gonna take a look at what happens here around 1 p.m. and see if there's any opportunities that come up in the bond markets and in the stock market as well. So in terms of where we're at in the day here, we pretty much consolidated a lot on the session. If I flip over to the NASDAQ real quick, you can pretty much see that we're in a bigger trading range. And the S&P is actually a lot kind of more ugly on that 50-minute time frame, but we're going to focus more on the bond market since that's what's going to be, that's what's hot right now in my opinion. Hot, I guess I call it hot, but not really. So in terms of the structure of this market here, if you look at my point and figure charts, you can see where we've been pretty much consolidating for quite some time. Look at this chart. Actually, this chart on the 2-year treasury hasn't moved for the last 2 hours. We've been consolidating in this range. The center of the range is 2 right there. So for me, 2 is actually quite an important level. It's actually quite an important bias level for me, 2 on the 2-year treasuries. And I was watching how we were trading, but actually what happened was the volume just dropped away and we stopped trading. So I stopped trading as well. And when you're in the middle of a range and nobody's trading, you just stop. So now we'll see what we get here in the next 3 minutes. Basically, I'm looking around, 3 ticks away from that area, and in terms of the 10-year, above 15s I'm bullish, below 12.5s I'm bearish, more or less. On the 5-year, below 26.5s I'm bearish. It's a little, you can't really make a call right now. That's kind of where we're at. We're in a scenario where you can't really, there's not really a read to be had, so you just have to wait it out. So you can see in terms of the 30-year, we popped up, took out some buy stops, now we're back in the middle of the range. So who's to say we can't go back there? Well, you don't know. We'll have to wait and see here in the next 2 minutes. So I'm bullish above 8s on the 30-year. If we hold above that, that's contextual. 13 is the resistance, and now we're selling off back into the range. So that's where we're at in terms of the market context. Pretty much tightly knit, and we'll see if we get any kind of movement here. If not, then we'll just go on vacation early. You know what I mean? I just showed you guys the screen. MJ, it's not stressful unless it's only stressful if it takes you 3 winners to make back 1 loser. If it's the opposite, you're doing well. For example, I had 1 trade today and it made up for 4 trades yesterday. So if you're playing a winning game, you should be all right. Also, you got to know your market. You got to know your environment. You got to know your strategy well enough. That way you have confidence in what you're doing. Obviously, if you don't have confidence in what you're doing, you're going to be feeling uncertain. You're going to feel stressful. You're going to have fear in your execution, which you'll never be able to get around until you resolve it. Okay? So we got 15 seconds here and see what happens. You could say 27 halves on the 5-year, about 14s on the 10, and about 8s on the 30s. Get this guy out of here saying all in. Just joking. Yeah. This guy says you love shoveling snow. Funny one. I'll be honest with you, I did that. My uncle runs that kind of business. So there's a bit of ticks up here in the 30-year. So far nothing's following. Thirty years ticking up. Say about 3 ticks, so like 9 to about 12. I would say 12 bit is pretty bullish. This 2 year still hasn't moved. We're still trading at 2s. And the 5 year is trading at 27 half. Guys, I honestly can't guarantee I'm going to answer all of your questions right now. But I might do like, wow, look how thin the 2 year got. I just realized that. Okay, the markets are very thin right now. Look at the liquidity. This is crazy. So there's definitely something going on right now. Wait for the liquidity to come back before placing any trades. What I was saying is, yeah, there you go. There you go. Something that just happened. So the 30 just sold off like 10, 20 points there. Look at that. Okay. So what I was saying, guys, is don't guarantee that I can answer all your questions right now. I'll do a portion later in the live stream if I'm still around where I'll answer some of your questions. But unfortunately, I might not be able to answer your questions right now, okay? So we saw a big old drop here. Let's see how the markets are reacting to this. This drop is not unprecedented. I've been watching the market almost all day, so I'm just taking a look at how this plays out relative to the context. So we're ticking back up after that drop. Liquidity kind of came back on the 2 year. Let me make sure you guys can see my cursor as well. There, you should be able to see my cursor now. There we go. So the 30 is ticking back up to 61 there. I keep a closer eye on the 2 year while trading the 5, that's for sure. So a mistake I made yesterday was I was paying too close attention to the 30 year while trading the 5, when in reality the 5 is more correlated to the 2 and 10. So here we go, the 2 is ticking down, the 5 follows. 625 is offered on the 2s. Interesting. So in my opinion, if 625s are offered here, I'm pretty bear biased overall. We're below 26 halves on the 5s. We're below everything. This is overall still bear biased as we're below all levels of context. So I'm not looking for long trades at all here. say 25s on the fives. Looking about 3 to 5 ticks up. It would be 26, 26 and a quarter. No, about 26 and a half, I'd say. So these short terms are moving lower here. Meanwhile, the 30s are just chopping around here. 24 halves now, 24 quarters trading on the fives. So the 2s and 5s are selling off at the same time here, as well as the 30s kind of following. What's tricky about this is like you have to let it play out a little bit. You know, it's not worth chasing anything here. Just let it play out, let it accumulate a bit of volume, let it give you more signals. So 24 and a half, there you go, and 9 on the 10-year. Okay, you guys see that? So I'd be looking at right about there. So 9s on the 30s, you'd be looking at about 10 and a halves, I'd say. Wait. 10s to 11s on the upper end, and in terms of the 5-year, as we're coming back up now, trading volume here, 25s, 5 and a quarter, and we see a seller hit it back into 24 half. So we moved 2 ticks up, came back in. That tells me the market's still pretty bearish. Eights on the bid on the 10-year. And there goes the market flushing down a few more ticks. So remember, it was 24 half, 75. I would say as low as 23 and a quarter on the low end. So the 3-tick rotations are pretty good. The 2-year is doing barely no volume here, so it's kind of tricky to gauge that. This is a 30-year bond auction after all, so that makes sense. Okay, let's see if I have a second. Maybe I can answer some of your questions here. Hello, Marius. What's up? May I ask how, MJ says, may I ask how tight is your break even? When you put your break even stop once it's available? Okay, look, this is really relative. It depends on your trading setup. I have some really strict rules in regards to how fast or when I put in break evens, because with certain setups you need to be more lenient with your break even. Other setups you need to put them in right away and trail your stop as fast as it's in your favor. Okay, so it's relative to the setup. It's relative to the environment, to the context around your current setup. So it's totally discretionary. You need to be able to determine if you're willing to allow the market to test your price another time, because in some scenarios, in some market conditions, you're giving away money by putting in your break even too fast. Okay, that's just my perspective. Trading More Stocks says, what time zone? I'm in the Eastern time zone. And CM Krish says, I looked at your TWS videos. They're very informative. Thanks, dude. I appreciate that. I got more coming for you soon. Okay, you know what? I can turn on my camera now because, whoops. Oh, there I am. There we go. Hey, what's up, guys? Because the sun's out of my face like it was before. I thought most retail traders don't trade during rollover. Okay, so the bond market already rolled over about a couple of weeks ago, so bonds are not rolling over. It's the stock market that's rolling over. And you're right about that. Okay, so we traded 2 ticks under 24.5, coming back up. 30s are ripping. Uptick on the 2 as well. Let's say in terms of the 10-year, you're looking about, I want to say 3 to 5 ticks. FVA 3 to 5 ticks. Okay. 24.5, we made up to 25.25. One lot printed there. Overall, there's a lot of slow action today. There's not much going on. But what I can say is about the way it's been trading up here at these I'm curious to see how it trades going forward. Okay, so we're back at 24.75. If we print 25s again and holds it bid, I'd consider a somewhat of a long trade. That it would have to be a trade that works relatively quickly, because it's kind of a fade considering the market's below all areas of context. So that's an example, MJ, of where I would trail the stop a little bit faster than normal. There's a down tick across the board. And every time it comes back and ticks, there we go, 24.5's printed. Look at that right there. Saw that size print there, about 3,000. Still bid. So now in this scenario, if 25 quarters are bid, I'm pretty much long biased here. If all the correlations are ticking up. So 9s, 10s, 10.5s, 10s, 10.5s. So you want to see 10s, 10.5 staying bid there. Let's stretch it to 10.5. That's fine. 10.5. Or 11s, 10.5, 11s. You want to see 10.5, 11s here staying bid on the 10-year, and 25.25 bid on the 5-year. I think that's reasonable. So it's kind of inching its way up here. Remember, we trade about 3,000 contracts here. Now it's bid. There's 25.25 printing on an uptick. Prints right back down immediately. That's pretty good. Prints back down 2 ticks. Would be nice to see a nice little back tick here, a bit of absorption, a few thousand contracts. Hey, Juan Pablo, you have to consider your your leverage. Go watch the video I did on I don't remember the title of it. I think it was something like how to calculate your risk as a day trader, or anyways, it's one of the last about 5-6 videos I upload on the channel. Risk control for day trader, something like that. I kind of gave a good idea in that video about how much capital you should have in your account. per contract. But basically, a formula that I can give to you is identify what your approximate risk is per bet, per trade, and make sure that's around 1% of your account or less. You know, you can stretch it to 2% if you want, but that would be the general rule. So don't think just because you can use a day trade margin, the broker only requires you to have $100. Don't think you can start an account with $300 and trade one contract, because really what you're doing is, you know, if you give yourself an appropriate level of risk per trade, you're only giving yourself like 10, 20 trades, and that's not enough. You need a little more. You need more shots to be fired. So back down to 24.5. There's nothing going on. Clearly, it's just chopping in this range. However, the setup is still there. I would say the setup is still there. If it makes it to 25.25, I'd still be long biased above that. So that's setting up. The 2-year is making lows here. And let me just... So from weakest to strongest, the shorter term bonds are weaker and the longer term bonds are stronger. So we bounced right off of those 28s. Well, it overshot it by 4 ticks, but that area is still in play. I'm talking about the 30-year. Now, as the 2-year sells off here, we're starting to approach overnight lows. We're actually 1 tick away from there right now. We're 1 tick away from overnight lows on the 2-year. $24.5. Let's see. 23.75. Interesting. Okay. Starting to see the picture sort of play out here. Howdy. The structure is kind of messy on the 10-year here, but we are leaning on overnight lows in the 2-year. That's something it has going. And I would say that's about it. You know, 24.5. Let's see, 1, 2, 3. As low as 23.25. You know, that's the lowest I'd be willing to go here for a bid. And this would be like a trade that's like in your favor right away. And as you can see, there's some pretty strong orders here that are holding the price up anyway. So we traded 23.5, just 300 contracts. We're trading 23.75. And we'll see if we print down 2 ticks here. That'd be interesting to watch. As long as the overnight lows are holding on the 2-year, I think I'm pretty confident bidding here. If these overnight lows start getting offered over, it's going to be a little risky. And I'll probably pull that out. So 23.75, this is sort of the pivot that I'll be watching right now on the 5-year treasury. And it looks to be about 8.5 on the 10-year. 8.5 to 8 on the 10-year. So I'd like to see 8s, you know, flush and trade. But the way it's trading now is not very favorable. I don't like this. So if it backticks all the way to 24.5, it's not. Obviously, I'll probably pull this out. Hey, what's up, Kinger? I appreciate that. Thank you, sir. Happy to help. Okay. So 8.5 stayed bid. We're back at 24.5. It was 23.75 as low as 23.5. So I believe I missed the trade, so I'll take that out. That's not relevant. Vark Tech. I have no idea what that means. So it looks as though the 2-year bounced right off overnight lows. To the tick, in fact. And let's see if we get any kind of trading range action here. Everything's ticking up there. Not back ticking either. Notice how it didn't back tick on the way up. It just went straight up. You know? So you got Norton method traders who are gonna like pump in their bids here. You'd be chasing if it was my opinion, you'd be chasing it here. All we do is twin. I'd say I'm pretty borderline, to be honest, but I've been pretty successful so far trading bonds. I find I have more patience. I can plan setups better. I can qualify them a little easier, and the tick value is a lot better than on the stock indices I'm used to trading. So in that regard, I mean, I'm pretty confident in what I'm doing. Because I've seen it work a number of times. It's just a matter of executing it, you know. Okay. So remember I was talking about 25.25. Now we're up there again, but like I just told you guys, the way we traded here, I just finished saying again, remember everything I say, because I believe that traders who have experience watching the markets, they're smarter than they think they are, you know. So you should always listen to everything you say as a trader. Every bit of analysis that you make, you should always listen to what you say. Do not forget what you say, because I've seen this happen so many times where traders talk about one thing and they do the opposite for whatever reason, you know. So I just finished saying the market is going up, and if you're bidded here, you're chasing it. You know, you could bid 25 quarters here, but I wouldn't now because of the context, because of how we got here. But we'll see what happens. I might be wrong, right? If 25 quarters stay bid and we rally from here, it's bullish. Now, if 25 quarters go an offer again and it's chopping around here, that indicates to me that not chasing is the right thing to do, which normally it is. Chasing gets you into trouble. Three. How many years? I've been trading for just over 3 years. I've been day trading for probably just over 2 or a little more. So it's kind of slow action, guys. There's not much going on here. I just thought I would pull up. I wanted to watch the 1 p.m. auction, but clearly nothing happened. There was volatility for about a second, and now we're just kind of slowly recovering here. So I would imagine it about 13 on the 10-year. Well, you could say it's about 12.5 to 13 actually. It's not quite 13, so it's about both of these levels. Okay, so the 10 years into some context here, into some resistance. Okay. We're starting to get a bit of a picture here. So 12.5 to 13, that's fine. And that 2-year, sorry, the 30-year, you're gonna be looking at something like 8s to 9s. That's the area of resistance I can see there. And the 5-year, there's nothing in sight for quite a while. So basically we're playing off of that area of context. We're playing off of context in the 10 right now. Because the 2s got nothing. The 2s had the overnight lows, which worked really well. And the 10s have now this 12.5 to 13 area. So let's give ourselves a decent area to work with here. 11.5, 12.5. It lines up well. So $25 quarter. Let's see here, 25 quarter. Get a bit overshoot 26.5 more or less, and then also 26.5 lines right up with the previous resistance. So 26.5 is a decent area. Just depends on how we get there. Would be nice to see a quick flush, you know, but that would be the area on the 5-year. It would line up with 13.5 on the 10-year. Have you experienced price lags with TWS over the past few months? Not really. Well, I don't use it as a day trading platform, so I couldn't really tell you recently, but like, how do you describe, what do you mean by a price lag? How do you describe that, you know? Because you got to understand that their data is not a tick data feed. You're not seeing tick by tick data. You're seeing an aggregated data. So you're seeing an update of the price every, maybe about 3 to 5 times per second, maybe about 5 times per second or something, or maybe less, I don't know. So it's, so that could be the lag you're experiencing, you know, especially if you're comparing it to another type of data feed. So 26s are going to be the area to watch here. 26s on the 5-year. I'm curious about 26s as the 10 years tick up here. Yeah, that's an easy way to put it. But it's not that bad. I mean, look, it's not, you have to understand what it's for, right? It's not for day trading, in my opinion only. Oh, look at this shit. Look at this. Look at this. It blew through. Oh, look at this. Look at this. Look at this. Look at this. Look at that, guys. You saw that move? 891 contracts at 26.5. Look at this, guys. Oh my God. How beautiful was that? Where were we just trading? 25.5? Yeah. Let's put it there for now. Now, I don't believe it should come back and trade 26.5 after doing that. So we're going to see if it gets any kind of, I want to see if it has the potential. So the 10-year just ran 13 and something, 13.5 traded there. Now we have 1,300 contracts at 26.25 on the 5-year. Let's see if they trade it. So right now we're 2 ticks in the money on that trade. Do we take it for 2 ticks? That's the question. $12.5 should stay offered. Okay, we saw one lot print there. 12 and a half are not offered. 12 and a halfs are bid on the 10-year, guys. I'm curious to see if it prints back anything. Okay, it printed a little, not really. Probably, yeah. Let's see if these guys trade here. 12 and a halfs are bid. Maybe it's just a matter of just being a little bit patient. They didn't trade it, they trade back 26s, okay. Watch the bid 1.5 on the 2-year. Twelve and a halfs are offered now, guys. $30s tick down, everything ticks back up. Still 2 ticks in the money here. 12 and a halfs are bid but offered. Tick down. Didn't want to trade there. Do we trail it right away? That's the question. I think we should. 12 and a halfs are in fact offered. $200 contracts on that bid. You know what? I trail it right there. 2 ticks in the money. I don't mind. I'll take a 2-tick profit if I have to. Let's see if they hit 26s. I'll take a 3-tick profit now. And I'm filled at 25 and a half. That's what you get for waiting for your prices, my friends. 25 and a quarter is now trading. This is where you could say, you know, you would have trailed it a little more, but you guys, whoever was watching, you guys can take a moment to see how I planned that trade. Well, unfortunately, you're not really able to see how I was calculating that price, but everything about the entry was perfect. It was a perfect execution, a perfect entry. The way the order filled was perfect, and there was no conflicting signals after the order was filled that was against me, which made me a little bit more lenient. You know, I wanted to, like, as the market is giving you more information, you need to either kind of tighten your risk or let it run a little bit longer, okay? So in this scenario, as it was running in my favor 1 tick at a time, as you saw there, I was tightening it up, right? I was like, I'm not going to give back 3 ticks. No, I'm not going to sit here trying to give back 3 ticks. If it goes and hit my limit, go ahead and hit it. If you come back, I'll take it out for a 3-tick or 2-tick profit, a 3-tick profit, right? So that's an example of where I was disciplined. I practiced good discipline for trailing open profits. And this, in the long run, is going to make a big difference for you, for me. So that's one I'll go back and watch, that's for sure. I'll go back and watch that trade where we top ticked the resistance. You know, we had resistance as context in the 10-year at about 13. Sorry, 12 and a half to 13. And it happened to line up based on where we were trading in the 5-year, which was 25 and a quarter, up to 26, add 2 ticks to that 26 and a half. Printed through it really fast and was offered immediately. The only way you can get filled there is if you had a limit order. I had a limit order there, got filled, and then the market's in your favor right away. And it lined right up with the context in the 10-year, and that was it. 4-tick winner or 5-tick winner, what was it? It doesn't matter. There you go. Thanks, dude. I think reviewing winners is more important than reviewing losers. My opinion only. Reviewing winning days is more important than reviewing losing days. You want to know why? Because over the course of your entire trading year, after you take away holidays and weekends, there's only about 9 months of trading days, maybe. And within those 9 months, probably around 3 or 4 months actually have good price action. So that means that the majority of days you're grinding and a small percentage of days you're doing well, you know? So that's why, you know, the small percentage of days where you are making money, or where you're crushing it, where you have good trades, where you're not, where you're disciplined, where you're following your plan, you're doing everything right, and you got paid, those are the days you have to review more than your losing days. You know, guys, they look at they start reviewing losing days because you're emotionally attached to your losses, right? When you lose, you feel like crap when you lose, right? So you want to review everything you could review about the losing day, so that way you can prevent it from happening in the future. But in reality, you have to understand that what I just told you is that there's only a small percentage of days in the year that actually have good price action, that you can actually make good money, you know? The rest of the days, it's, you know, big players that can do what they want with the market, and there's not enough participation that there's good probability of getting good order fills and whatever. You know, so you have to understand these things. You got to review your winning days more than your losers. Francois, I am using Sierra Chart, and my broker is Ironbeam, but that's for futures trading. I use Interactive Brokers as a stockbroker and for investing. And I would, but my trading platform is Sierra Chart. That's what I was gonna say. Yeah. All we do is twin. He says he likes Dash Trader. That's cool. It's a bit on the pricey side, Dash Trader. It's like $150 a month, no? You know, you can get the same, you can get a better platform, aka, I don't want to say Sierra Chart, but Sierra Chart, and it's like probably, you know, a quarter of the price of Dash Trader, including equities data, including the data feed. But you'd have to try it. Okay, don't just take my advice on that blindly. Christoph, you can, yeah, sure. Post what you're talking about. I'm curious. But in terms of the wrong prices, they're not showing you the wrong prices. I don't know what time frame you're trading off of. You'd have to give an example. Like, are you looking at like a live market? Like, for example, if you look at the NQ, if you look at the stock market, you know, this is like the live price, right? So what do you exactly mean by delayed quotes? Okay, I don't know what you mean there. I was taking a look at this contract right here, which is Fair Exchange oil. It's kind of getting better for the liquidity. I believe they're still doing some testing on it, but it's getting there. So I mean, like, I just pulled up the stock market here for about a few seconds, and there's nothing happening. I just saw NQ's trading at 83 here, nothing happening. Okay, treasuries are also nothing happening. Like, that trade was a total fluke, I must say. Well, I wouldn't say it was a total fluke. I mean, the area was there, the area of context was there, everything lined up, you know. So I placed the order there and it lined up and it worked, right? You know, those are far and few. Those trades are far and few, guys. Like, now it's just chopping back at 26. There's nothing to do here. You know, it looks like it's sleeping, right? Nothing going on there. Gonna refill this water, guys. Leave some, if you have questions, leave them in the chat. I think we're gonna chill out for the rest of the stream here unless there's another opportunity, but we'll see. Who's busting my balls now? Who be busting my balls? Pierre phone. Weird people. I've been getting these scam calls like today, you know? You know when you get those weirdo scam calls and say,
hey, your social insurance number has been identified and you have to go to the post office or else your identity is going to be compromised.
Fuck, man. There's a lot of these scam calls these days. It's such bullshit. Well, I'll bring you guys over to the chart screen real quick here. So as we can see here, the 2-year treasuries bounce right off the overnight lows. I'm gonna bring myself over. I'm gonna fix my camera. Here we go. 1, 2, 3, and it's magic, I'd say. All right, 2-year treasuries bounced off the overnight lows there. Take a look at this chart, huh? Look at that, right off the demand zone. Okay. That's a 2-year treasury. Has been consolidating all day. In terms of the 5-year treasury, this context is not as good. You know, I always give precedence to what I believe is the best context. So sometimes you'll see like areas where there's kind of like a bit of a lack of clarity, and I tend to avoid those, right? So I try to figure out where there is clarity. So here's clarity right here. Resistance in the 10-year, resistance in the 5-year, which was previous support right around this 26.5 area, give or take, you know, a few ticks. That area was resistance to the tick, literally. Actually, it was 26.5 to 26.75, but 75's barely traded any contracts on that up move, but now we're back here again. So now it's not relevant anymore. It's always on the first test that those trades are relevant. It seems as though yeah, okay, and then the 30-year, there's the area of context in the 30-year, 8 30 seconds to 9 30 seconds. Above this is bullish, but right now we're into it. So we're into resistance right now on 35 and 10 is trading into the session VPOC area. So we're basically in the middle of the range again. We're smack in the middle of the range where we were all day. There was opportunity, you know, there was opportunity as we were moving out of here and now as we were coming back in. But now, in my opinion, we'll see what happens here. It's when the market's like balanced like this and it's just kind of like doing that, it's just not really conducive of good opportunities, because technically it can just stay there all day. You know what I mean? What was I gonna say? Oh yeah, let's take a look at the stock market. Why not, huh? So there's NQ and ES. Okay, so definitely a weird divergence there. As you can see, there's just kind of a lack of correlation on this 15-minute chart at least. I'm gonna fix up the levels. So there's resistance right there, 287.75, as well as 305.25, but that one's less relevant because we've already tested it. So I would say not relevant anymore. For me, once a resistance area gets tested and rejected, it's not relevant as resistance anymore, especially now relative to how it's being approached. That's sort of how I see it. So I'll just give you guys an example. You see how, so let's say I say this is resistance right there, which it was. You know, that creates a battle zone because we were one time framing 1, 2, 3, 4 green bars in a row. The first time we closed below the low of a bar, that's giving us a new battle zone. And you can see as the market went lower and then came back to test it, we tested through this area, rejected it. Now, what I believe is that once a battle zone has been tested like that, if it comes back to trade this area, it's, in my opinion, it's no longer a resistance. It's no longer a reliable area of resistance. So that's why I will remove that line after. You know, I don't believe that's relevant anymore. I believe the resistance is now down here at 287.75. Okay, so it's shifted lower as the market's lower, and as you can see, even look at where the high of this bar is before selling off. It had to top tick the battle zone and then finally bring it in. So this stuff works quite well. I love it. Here's the ES, and the ES is kind of in its own world, especially when you compare it to the NASDAQ. So, you know, you have support here, was tested through. Do I believe this support is still relevant? Well, I'm going to say no because of the amount of times we tested through it. I would say the support is more in the center of the range now. It's more like around here. It's more here-ish, like 85.75. And this resistance as well is also no longer valid as well. But it's just really bad action. This is just like kind of a lot of like range choppy action. So we'll just stay out of that for now. I believe we'll keep an eye on it, but we'll stay out of that. If we look at the Russell 2000, it looks as though this chart's a little bit cleaner. We'll go over there to that price. Went through it. Resistance is over here. Kind of morning chop, consolidation, and whatnot. That's what we look like on the 15-minute time frame there. Is there any specific stocks you guys want me to check out or something? By the way, guys, if you are in the stream right now, don't forget to smash the like button because it helps a lot with the channel. The like button is essential for your life. Hi, Mazur. It's called Sierra Chart. Thanks for being a subscriber. Very much appreciated. I'll give you guys some quotes here. Look at the Nasdaq's down almost 1% on the session. The S&P is down almost 0.3 on the session. As you can see, quite a divergence there. And the Russell's down 1.5 on the session almost. So, you know, kind of weird when you see the S&P only down 0.3, the Russell down 1.5, and the NQ down 1%. You know what I mean? So, and then we got the YM is up, you know, almost 0.2%. It's just weird, right? And you'll often see things like this during rollover, and you'll see weird kind of weird action. You know what I mean? I gotta stop saying that. It's weird. Treasuries are kind of approaching up flat territory, and this is where they've been almost all day. Crude oil's down 1.4 and not really doing much. Take a look at crude oil real quick here. I'll just I'll bring you guys over to crude oil chart, and there's crude oil right there. Crude oil daily chart has been seeing quite a recovery ever since we trade these 64s here on the daily chart. You know, you could say, you know, now $71, $70.91, approximately kind of a battle zone that it's like having trouble with. So, you know, if it could kind of like test them out. I think there's a good chance it'll test them out, these lows here, about these 71s. Maybe trade these 71s to 70s a little bit more here. But overall, this daily chart is still bullish at this moment. This is still bullish on the daily chart for crude oil. And the supply zone daily chart, you know, you're looking at $77 to $78 area. So right now where it is, kind of mixed. If we zoom in on the session a little bit, we'll bring them up here, and you can see kind of a choppy session. And it looks similar to what the stock market's been doing. So there's a bit of a zone for you. So, you know, up, chop, up, chop, up, chop. So I would say our resistance is right around here. You're looking at about 71.68 a zone. And let's see. You could also say there's a bit of resistance right here at 71.50 and something. So this zone, you know, this zone here could be like kind of extended. You could do something like this. You could do like something like that, you know. And you could say like, okay, that's our resistance zone, which kind of makes sense. Because I believe that if it starts getting back above this, you know, there's a good chance it'll test through the profile another time. But that was where it was recently most supplied from, and now it's most recently demanded from about these 71.30s and a little lower. So considering that this was a previous demand zone already, I would say if it's below this area, keep a bear bias. If it's above here, it's mixed bullish, kind of, if it's staying above that. That's sort of how I would trade it. You know, and it's always a little bit tricky to kind of gauge because the context change. You know, like I told you, when I mean mixed bullish, what I mean is choppy bullish, because you can end up in these scenarios where it can. I've seen this happen where it can grind up through the resistance, then pull back, then start grinding back up, then pull back again, then start grinding back up, then pull back again, then start grinding up again. You know, so. That's what I mean when I say mixed bullish. It means that it can grind and chop and do what it wants, but at the end of the day, it's going up type of idea. Yeah, So you got to understand, I believe as a trader, you really need to understand what environments are conducive for having good opportunities, and what environments are garbage, and you should just avoid it and go outside and play basketball, because you'd be wasting your time. Yeah, I appreciate that, Mr. Twin. Is the market going lower in anticipation of inflation data? I do not know. Let's. When is inflation data coming out? Is it tomorrow? This is tomorrow morning. We got a US CPI 8:30 in the morning. ECB speakers at 5 in the morning, Eastern time. 10 a.m. data tomorrow. And then 1 p.m. tomorrow we have a US Baker oil rig. And that's going to wrap up the week in terms of the event schedule. And today, well, it's pretty much already wrapped up. We had the 11:30, this 11:30 4-week bill auction. Nothing happened. I watched it. 30-year bond auction. I watched it. Crazy kind of movement, and then it chopped back up slowly, and I caught a decent short trade on the 5-year, and now it's trading back up to where my entry was, kind of. And it's grinding. I guess you could say it's grinding or steamrolling. Yeah, MJ, you can ask questions. Ask as many as you want. No matter how dumb you think they are, just ask them. Pretty soon I'm going to start putting you guys on a timer. All right. 30 minutes. Ask as many questions as you want. Okay, so this is the result of the 30-year bond auction. U.S. sells 22 billion 30-year bond at a high yield 1.89, previous 1.94. I don't really know what this means. I should probably do my homework a little bit. U.S. Senate votes 64-36 to clear the way for passage of bill setting fast-track procedure on debt limit increase. Republican senators, this and that. Let's see if we go over to indexes. What are they talking about? Same old thing. Same old thing. What about equities? All right. Okay. WhatsApp launches crypto payments pilot in the U.S. Who cares? That was yesterday, and that's the scenario. Okay, so we'll go back here, and I think I'll bring you guys back up to here. Okay. All right, MJ, I wanted to ask, how tight is your break-even stop? Do you put it in once it's one tick above your break-even? Okay, look, dude, I actually answered your question earlier in the stream, but maybe you might have missed it, so I'll answer you again. I believe that it depends on the context around your trade, and it depends on what kind of trade it is and what you're expecting. Okay, there's certain trades, I would categorize them as momentum trades, that generally speaking, when you enter into a momentum trade, you're normally expecting to be in the money almost right away, right? And if it doesn't get going after a certain amount, you know the momentum is over and you're no longer in a momentum trade. Now you're in a trade where it's going to get your stop loss. So in those scenarios, I would say, you know, the more aggressive your entry is, or the more of a momentum based trade it is, I would say the faster you have to trail the stop. But also there's an art to it. There's an art, I would say, in regards to, you know, there's certain trading setups that you have to be a little bit more lenient. There's certain market conditions where I would argue that you want the market to test out your break even just to see what it does. Right? But it depends. That's what I'm saying. It depends on the setup and how you playbook the setup based on the conditions it's meant to work in. Okay? So if you rewind the stream, you're going to see a trade that I took about 30 minutes ago or 20 minutes ago. And analyze my behavior about how I trailed the stop. And you'll see that upon entry of the trade, I did not trail the stop right away. And as the market was, I guess you could say, running in my favor, I started to be a little bit more aggressive with trailing the stop, because I wasn't going to sit here giving back 2, 3, 4 ticks as the market's giving me open profits. I'm not going to give it back, you know. So, you know, it's about, you know, understanding your playbook on a deep level and understanding when you need to be trailing stop fast and when you need to give it a little bit more breathing room. Also, in regards to trailing your stop, you need to understand how far away to trail your stop. There's an art to trailing a stop. You know what I mean? And I don't know shit. I'm just giving you my experience as a trader, right? So like, don't take everything I say and say, oh, this guy said that, you know, I'm going to do it this way. But you have to understand, you know, sentiment about, you know, like how traders think, why are bids appearing after a move happen, you know, like why are things happening, you know, like there's kind of a picture that's being painted to you as you're watching the market. Now the picture that's being painted here is that we've been kind of steamrolling. 1 second. Oh yeah. We've been steamrolling on these bonds. You know, we had one decent move right here. You know, we had this move that boom, I got filled, came back in, and then steamroller. So it's like, you know, that's what it is. We're into a bit of resistance here, but again, contextually, look at what the market's doing. You know, you could say we're into resistance, but really where we are is we're in the center of the range from today. And the way it's trading here, it's going slowly up. You know, I call it a steamrolling rally. So there's nothing saying that why this wouldn't just continue, right? So as long as this is continuing, I would imagine it just continues. It's a tricky read right now. I would say, you know, you got the 30-year approaching 13s here, which is resistance. You got, you know, the 5 years approaching a bit of resistance at 27.75. You got the 2 years right at 2s, which is the center of the range from today. So you can see how there's a lot of conflicting information. There's a lot of, like, we're basically in the center of the range from today. The 2 years are trading right at 2s here. And that's where we're at, you know. So, you know, this thing could rip up and just continue steamrolling up. You can bet on that if you want. Or it could just stay right there. You know, I mean, we're right in the middle of today's range, so it may as well just stay right there at this point, you know. So we don't really know what'll happen. We're going to be top of the hour here at 2 p.m. But I would say, judging on today's price action, I would say the opportunities now are a little bit more limited, especially in the bonds market. So for that reason, I think I might stop watching them, but I'll keep them on the back of my screen here. But we had a pretty decent day trading. I had 2 trades, and they both were, I think, 5-tick winners or 6-tick winners. But whatever. Doesn't fucking matter. What matters is how we manage our risk every trade. Review your winning days. What ticker symbols would you use for these bonds? Trading more stocks. So these are Treasury futures. So it's ZN. Sorry, the 10-year is ZN normally. The 5-year is ZF, and the 30-year is ZB. Those are normally the symbols, but I'm on CQG here, so you can see the symbols are weird. F.US.FVA. So that's the 5-year US Treasury. This is the 10-year US Treasury, which is, yeah, see there, a 10-year Treasury, no future, ZN. The CQG symbol is F.US.TYA. Yeah. Those are the ticker symbols. Haha, I know that. I wanted to see how people manage their break-even stop. We'll put it into use for my context. Yeah, it depends. It depends, man. You gotta understand. You gotta know how to trail stop. There's an art to trailing a stop. You know, you can call it break-even, but it depends on what's happening. Like, I truly believe there's an art to trading. There's an art to playbooking certain trades, and you have to understand, you know, like what you need to be doing based on what the market's telling you. You know. So, you know, if you get into a trade and you're offside right away, it means, number one, your entry wasn't good. So what do you do when you get into a trade and your entry is no good? Well, normally you look to cut it. I certainly don't look to add to a trade that I know my entry wasn't good. And there are exceptions, right? Like sometimes the market blows through you by a tick, trades a bit, and then it's immediately in your favor. That's fine because, you know, you can accept a little bit of offside or, you know, breathing room, you know, margin of error, I guess. But in most scenarios, if you enter a trade and you're offside and it's trading against you, all right, well, look, I mean, just either try to get a break even right away, or, you know, depending on what you can do, you know, work out for maybe a one tick loss in the treasuries or whatever. But that's why it's like really discretionary. You have to understand what you're doing. You have to understand the environment you're in. You have to understand what's the odds of things happening. You know, like if I'm in a short trade on the 5-year and I start to see the other markets are ticking up, that's already telling me that I should be looking to get out, you know. So like, see, like there, everything ticked down at the same time, and that's always interesting to see. Emil, I like this analysis. Thanks, bro. I think about the divergence between ES and NQ. Can we use it separately? Lately, I noticed a momentary different correlation between DWI and metals. I don't know what DWI is, but yeah, ES and NQ, they're supposed to be quite well correlated most of the time. But during rollover periods and weird periods, normally they can really get out of line, and because due to market spreading and different things like that, and rollover volume, the volume is less reliable. What's your source of data for markets? IB, like a broker, or Sierra 10X? I don't know what you mean. Sorry, I don't understand the question. For markets, yeah, I don't know what you mean. Yeah, so that's where I'm at, guys. We've seen a bit of pullback here. Looks like the 10-year ran into an iceberg of 21,000 contracts at 14.5. And now it's pulling back here, 13.5. So you could say 13. There goes 13, trading 20 contracts. So you could say, you know, previous resistance, now support, 12.5 to 13. 12.5, 13 on 10-year. Okay, CBOT markets, are you continuous, current contract, or further in the future? No, I'm on the front month. Always a front month contract. So right now, front month for bonds is March, I think. H? Yeah, March. That's front month for bonds. That's also front month for crude oil, I think, is January. And front month is still December for the stock market. And yeah, retest of break range can be small. Didn't expect sell-offs today. What's going on, Captain? Hope you're doing well, buddy. All right, let's take a look at the stock market. Why not? Not that I'll be gambling any profits away, but I'll take a look at it and chat with you guys for a little bit, yeah? And we can put some cheesy music in the background too. See if we got any people watching. Guys, what's going on? Don't forget to like the stream if you just arrived to the stream. And I don't know why I'm doing a hillbilly accent. Alright, so I'm gonna go and get this stream beats thing, so that way I don't get copyright claimed. And that's what it's all about, you know. Alright, let me take a look at something here. If you look at crude oil, okay, you guys see the sticker on the center left of my screen right here? This is supposed to be crude oil, right? You can see the quote there. We're quoting about, you know, 19 bid there to about 23 bid. This is a new contract. It's a fair exchange oil contract, and I was just checking it out, you know. That's the oil F. And that's kind of weird. I don't know why that contract is not there. But look, if I pull up December, you'll see that, first of all, the price is wrong. Second of all, there's no bid and offer quote, because I believe the contract expired. So go overhead and put, no, that's not the right one. F is the right one. And that's the one we were just on. sorry, 22. And there we go. We start to see a quote appear. And that's kind of what, this is the front month for oil. So as you can see, there's no volume going through, but the quotes look pretty decent in this scenario. Now I can't trade this yet, but anyhow. Let's put RTY as a Russell 2000 futures. Is it easy to look up options in Sierra? No, it's not. It's especially if you use interactive brokers and connect to Sierra. No, it's not. It's not. It's not. You have to type in the symbol. Like there's like a whole formula. You gotta like type in the expiry, the symbol, the exchange, and everything. I'm just downloading symbols from my associated watch list. I'm about to run a correlation scan. That's a pretty cool beat. All right, let's run the scan, go. Everything's correlated on the 1 minute chart. Everything's correlated. Look at this. ES, YM, RTY, FANG stocks, all correlated. So that's good. Too bad the market's not moving much though. So NQ's at 246. So 7-point ranges would give us, you know, $53. And as you can see, that's pretty much where the high is. Judging by how much it's consolidating here. Yeah, it's normal because the market's slow. The market's been pretty slow all week. You gotta wait for the right setups. Yo, what's up, JK? I think I'm gonna have to fix that, but it's not a big deal. So here we go, trading 39's game. About 3-tick overshoot, sorry, 3-point overshoot. You'll be looking about like sixes in the low end. I won't touch this because of how tight this range is. I won't touch this. Not with a 10-foot pole. I would not touch this with a 20-foot pole. That's what it's all about, you know what I mean? Any New Year resolution? In terms of trading, I don't know. I think it's just a matter of keeping to do what I'm doing. I'm pretty confident in what I'm doing right now, so it's just a matter of like keeping, you know, mentally sound, you know. I would say 36s is a buy if it holds. But it's slow trap action, remember that. There we go, 35. It's not a buy. It's definitely not a buy. I would say 9s are a sell. But the way it iceberg there at 33, I don't like that either. Yeah, it's definitely not a buy anymore. I would say 9s might be a sell. Like 9s to about 2s type of idea. But even that, I don't like the way it's trading here. It's just slow trap action. You see what I mean? Francois, good question. I mean, look, I guess because I have a YouTube channel related to trading, so and the YouTube channel kind of worked out, has been working out well. So I guess, you know, for that reason, I focus on that, I guess. And trading is my YouTube channel is related to trading, but it's more related to tutorials about trading. So that's partly why I decided to like focus more on that, because it was doing well. Did I get consistent? Well, I would say yes. I'm pretty consistent in terms of my confidence right now in what I'm doing, because I see my setups play out every day almost, and it's just a matter of like having that confidence and like that consistency and discipline in my execution to execute the trades when they're there, and to also cut bad trades if I'm in an entry and it's hesitating, just get out. Don't even hesitate in that regard, you know. So I would say I'm pretty, you know, I have confidence in what I'm doing. So for that, in that scenario, yes, you know, I'm green today, but today is today, right? I don't know about tomorrow, or just today, right? And you know, there's certain things about in your trading that I believe could that boost your confidence or take away your confidence. You know, like one of them is like risk to reward. So like if you take, you know, if you have let's say you have 3, 4, 5 winning trades, and then you have one losing trade and it wipes them all out. Like I can't trade that way personally. I find it just destroys your confidence. It just destroys your mental state, you know. I would much rather, you know, have like, for example, yesterday I traded 4 times and I lost a total of 4 ticks. And each of those trades was like a 1 tick loss, 1 tick loss, and then a 2 tick loss where I lacked a bit of discipline and I got a bad entry and I didn't really scratch it fast enough. So I lost 4 ticks in the day, but I had 4 trades, because actually the first one was a scratch. So I had a scratch, 1 tick loss, 1 tick loss, 2 tick loss. And then today I've had 2 trades only, and both of them were, one of them was a 6 tick winner, the other one was a 4 tick winner. So, you know, when you have, you know, one trade that can make up for 4 scratches or 4 losers, that's the business I want to be in. You know, I don't want to be in a business where one winning trade I give it back. Sorry, one losing trade I give back 5 winners. I don't want to be in that scenario. You know, and you can end up in that scenario if you're like a super scalper. You know, it's hard. That's right. You need to understand your playing field. So for me, this was a slow trap action. I don't believe this is good area for trading. Good trading. I don't believe this is good trading, because what we did, if you guys were paying attention, we were in a trading range and then we slowly started to break out of the trading range. And once the market broke out of the trading range to the bear side, what it did was it just kept going, right? And it kept going. No pullbacks, right? It just kept going, chop around, kept going, chop, kept going, and now it's going up again. Okay. So, you know, it's just like, it's very one-sided. When you get the market very one-sided like this, it normally means it's being controlled by the big players more, because they can, you know, they can push the market one way until they want to stop it, and then they stop it, and then, or until enough orders get filled basically, and then they start pulling the orders on the other side and it starts going the other way, you know. It's like, it's very like trap action, very choppy trap action. Not choppy, one-sided trap action. That's what I meant. Which platform is the best for trading options? I don't know. What's your feeling about IBKR trading options? You know what? You could do it. I don't know what kind of trading you do. Like if you do like spreads and that kind of stuff, maybe it's good. For outrights like scalping, I think you could use a better trading tool. Like if I was gonna scalp like long options, like stock options, and I needed like advanced trade management and stuff, I would maybe be able to pull it off in TWS, like you're saying. You're saying IBKR TWS, but like I would want more automation in my trade management. Like look at this movement, it's crazy. But I would want automation, like in the sense that like where I can move my stops with one, with a button. I can like just do everything. Yeah, look at that move. We went from 20 to 19, 29 to 36. There you go. That's crazy. So like I'll switch over to trade simulation mode just to show you what I mean in terms of trade management. So like click, you know, if I want to move my order up and down, I want to be able to do this. I want to be able to like, let's say I short it, right? Let's see if I get filled on a short. This is not a good trade. I'm going to get, okay, I got filled. Now you see where my stop is? Let's say I want to move my stop. I want to be able to move it with a button like this. I also want the ability to get out of the trade right now if I click on the bid and get out, but it's going to take me out for a 1 tick stop. And I also want the ability to have all my orders cancel when your position is flat. Those are a few things like advanced trade management. You could even go a little bit more technical. Like you could say, you know, like one thing that I think is pretty reasonable is called a limit chase order, which is something that's only available in Sierra chart, which is basically if you have a limit order at one price and the market trades at your price, you don't get filled, it immediately moves your limit order down to the next price to try and get filled at the next price. So like to try to get you out faster, you know. That's one thing. You know, TWS, you're playing with fire. But I'm gonna make a video probably later when I get off the stream. I'm gonna try and make a video about something in TWS that I wanted to show you guys. So yeah. You want Tesla to flush or Tesla to recovers more? Wow, Tesla. Tesla's down almost 5% on the session. Look at that. Been selling off since the morning. I believe there's a bit of support here on Tesla, right around 1,015, about $15. You're into a bit of demand zone here now on Tesla, 15-minute chart. What do you guys think of that? I still wouldn't trade it. It's too crazy. All right, I'll be back in a minute, guys. 1 minute. What's poppin'? It's called Sierra Charts, CD Davis. Anybody? Anybody out there? LCID. Want to take a look at LCID? Give it a second, download the data. I heard a lot of traders raving about this stock, so we'll take a look at it. It's just downloading about 10 days worth, or maybe more. I was supposed to say 5 days worth, but anyways. Yeah, look at that. Oh my god, what a bloodbath. I'd have to see the daily chart on this one too. I don't think I'll get it. No, it's not gonna get it. I need to put it on the daily chart as well because it's two different charts. Yeah, it's pretty ugly on the daily chart too. Look at that. Daily chart, LCID. You have a battle zone coming up here. See this? Boom. Right here. There's a battle zone here. $35 and something. You could extend it maybe a couple points out of the way, but that's your battle zone right there on the daily chart, in my opinion. Other than that, it's still bearish now. I mean, look at where it is. I think it's got room to go lower under these 38s. 15-minute, bearish, right? You could say right now, $38.42 and something. You know, if it holds this area temporarily, you could see maybe a bit of short covering rally. Maybe this could be a temporary low put in. Trade up to about $40 even offers. But the way it's currently still offered here, it's still bear bias. So for me, the trade is if this thing is staying below this into the close, you just stay. Right now, it's still short biased. If you're short on this, there's no reason to cover just yet. There's also a bit of a battle zone right here. There was. So you had boom, boom, traded the high of it, sold off. So 39 and 2. Those are a couple areas I can determine right now just by seeing the structure of that. For me, there's a lack of opportunity a bit right now, so I might just cut it and go outside or something, or make a video, do something else. Honestly, I just started this stream because I wanted to check out the 1 p.m. bond auction. It turned out there was some volatility. I got one good trade out of it, and now it's just chopping away. So you know what, I think I'll cut it for there today, guys, and because I can see the market's still quite slow. So I'll just one second. These are my 2 trades for today. So I guess you could say I'm up what, 4, 6, I don't know, that's including commissions too. So let's see, trade activity, no, sorry, it should be trades. I don't know where it would be. FVA short, here it is, December 9th, right there. These 2 trades. These 2 trades are for today, right here. As you can see, there's a lot of red there the last few days, but this was yesterday. I had 4 trades, break even, 1 loss, and then 2 tick loss. As you can see, and today I made up for that and more. So we're doing all right. And that's what I like about the treasuries, because the tick values are high. So, you know, you just have to nail a decent entry. If you get a runner, all the power to you, you know. All right, guys, so I'm gonna cut it there. I'm gonna do something else, go work on a video or something. I'm not gonna look at the markets anymore. They're just kind of slow, but I'll catch you guys tomorrow. I'm gonna try and get up early tomorrow, and I'm not gonna stream. I don't stream the mornings, but there should be some volatility early tomorrow. So I wish you guys a great rest of the week. Keep your